Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 11th of May. Right, just a bit of a recap on the US CPI numbers. Now, the core numbers, these are the ones the market is or has been reacting to quite closely, came out right on expectations. Now, you wouldn't usually expect a move, but the CPI number itself, right, excluding energy and food, came in at 4.9%, right? A lower print. I think just the fact it was below 5% got the market very excited, and we did see a little bit of a spike across the board on the dollar. Right, sterling jumped up 70, Aussie about 70, Kiwi 50. Even the euro, which hasn't been moving much, sort of moved to the top side. So a bit of a knee-jerk reaction. And if you were watching the numbers closely enough, you'd realize that those numbers weren't the key numbers that the market is, really focused on. It's the core numbers, and then the market retraced very quickly. Now, let's have a look at what's happening today. So as we come into Thursday's trading, right, there's some inflation numbers here out of China. Be interesting to sort of see how these come out and see if it impacts the Aussie Kiwi, right? That's the direct correlation with the Chinese data. Now, more importantly, the Bank of England rate decision, right? Now, this can be a bit of a calamity. 0.25% is factored into the market. Now, you've got to expect, right, that the Bank of England comes out quite hawkish, right? So looking at the core data here, right, inflation at the moment year on year is at 10.1%, and their target is 2%. So they've got to raise rates. I know it's only by 0.25 at the moment. I wouldn't be surprised if it was a little bit more than that. But with inflation so far above the market, they've got to be hawkish, right? But that's going to be fully factored in. So this is a very tricky trading situation. But with that in play, it really brings in sterling and sterling crosses. US PPI numbers, well, they are coming up. Hopefully they confirm the CPI numbers out of the US yesterday. And just looking at those PPI numbers, okay, the two numbers we're really looking at are the final demand month on month and the ex-food and energy. These numbers here now, from the previous month, they're expecting a little bit of a bounce. We'll see how that goes. Lower numbers really confirms a weaker dollar outlook, right? But if we get stronger numbers towards the higher end of the range here, then that may sort of take a little bit of shine off what the inflation numbers were doing yesterday and bring it back into sort of, well, not really balance, but just take out the sort of goodness that we saw on the US inflation numbers, which were slightly weaker on the CPI itself. And we'll see how it goes. But negative numbers is where the trading opportunity really is. So if you come across to the charts here, sterling, as I was just saying, sterling is a major focus. So if I get up my sterling template here, I can have a look across the board now. We've got a resistance line up here at 126.80, right? It's a long-term resistance line on sterling. You've got to be having a look at that because there's going to be a lot of stop losses above that level. You get 100 odd points down to the support line. I'm not so sure about that, but sterling has been doing a good job against most instruments, but now breaking down against the Kiwi, starting to break down against the Aussie. And you can see here, we've got a nice trend line here on sterling yen. That's probably the best technical setup out of all of them. Euro sterling, well, you'd expect euro sterling to be lower because euro hasn't been doing anything. Sterling's been rallying. And sterling CAD sort of mid-range, but ready to break down, along with its commodity currency cousins, Kiwi and Aussie, right? So what you're trying to identify is where is the opportunity? Don't forget, the inflation numbers are factored in and probably a hawkish tone from the Bank of England. So what do? Well, to me, I'd be watching the market, what they say. You're looking for a surprise, and I just don't know what that surprise could be at this point. So it's a bit of a tricky one. To me, I'd always go back towards where the best technical setup, or think about if they weren't so aggressive on their hawkish tone, what would happen to sterling? Okay, so now whether that's a seller or a buy, you probably have to sort of throw your arms up in the air. But that's where we are. Sterling is the major focus. There's not much more to it. There's no need to sort of chase other instruments. But if you're looking to trade, keep an eye on sterling. Obviously, it is going to be moving around on the data. The PPI number after the release, right? It's an hour and a half after, may be an easier trade. we get a hawkish tone here from the Bank of England, like I'm talking very hawkish, well, then you might start to see sterling rally. We get weaker PPI numbers. Sterling has got a rally, right? It's about connecting the dots with the data releases. And that's where you can find some of the better trades. All right. And that's pretty much all we've got today, guys. There's nothing more to look at. If you go through the next couple of days of data, you'll find that we do have a range of extra sterling numbers, GDP growth, industrial production and manufacturing production numbers. These are really, I'd say, higher impacting than what this calendar is suggesting. And that's where my focus would be. So sterling crosses for the next 48 hours have got to be in focus. Good luck, guys. All the best. Cheerio.